So today we had the Tesla earning numbers released along with the forward guidance coming from the earnings call, and in this video I want to go ahead and break down a couple of things. Now the first thing I want to point out is that total gross margins only fell down to 18.2%, which isn't too bad considering the fact that Tesla had to slash prices for a lot of its vehicles earlier this year. Now, during the forward guidance in the earnings call, we heard Elon Musk mention that he sees Tesla going 5 to 10x further in the future, along with some updates on the Cybertruck. With the update being that the Cybertruck will be getting delivered this year, although we don't have a time frame. However, high production and deliveries will start in 2024. Now, today we also had an update that Nissan is now the first Japanese automaker to also adopt Tesla's supercharging networks for its EVs that it's going to be making in 2025. Which is interesting because once we start looking into the fundamentals, we see that services and others still increased for the second quarter of 2023, yet we still haven't really seen the full effect of this once we actually start seeing the revenue from all the other EVs actually using the supercharging network. But I also want to point out that we saw automotive sales for Tesla actually increase quarter over quarter, although we still saw automotive regulatory credits declined, which is actually pretty interesting because we know that going into 2024, it's likely that Tesla won't get the full EV tax credit. Now, something else from the fundamentals that was pretty interesting is that capital expenditures remain pretty much similar from the previous quarter despite, the Cybertruck production. Now, on the earnings call, we did hear the unfortunate news that Q3 is expected to have slower delivery numbers due to upgrades in global factories, which is definitely a little bit of a concern for Tesla. However, I want to go ahead and explain in this video why this provides a huge opportunity for individuals who are trading Tesla or also investing in Tesla long term. For example, we recently saw that Bank of America's global research team put out a paper saying that Apple and Tesla are both underweighted by active funds. In fact, when you look at it, we see that Meta, Google, Nvidia, Amazon, Microsoft all are heavily exposed by a lot of institutional investors, yet we don't see that same exposure for Tesla. Now, this is something I've highlighted in a multitude of different videos in the past on how this is actually good because we have seen that tech has been very overcrowded, and although Tesla stock did dip after the earnings call and also during the earnings call, this may actually provide an opportunity for institutional investors to go ahead and buy the dip and actually start adding more into their positions for Tesla and kind of cutting off or shaving off their positions in the top 3 stocks that really move the overall S&P 500. However, with that said, I want to go ahead and hop into my laptop, kind of break down some of the technicals with Tesla and talk about a couple of other things that were mentioned during the earnings call. Alrighty, so we are officially in my laptop now. As I said, I want to talk about some of the technicals, but I also want to talk more about some of the things mentioned in the earnings call as well. Now, as I said earlier, we did hear Elon Musk saying that, hey, in the long term, it's possible to see Tesla do, 5x to 10x. I do want to say that we have to take that with a grain of salt, right? I know it's very optimistic to hear the CEO say that, but we do have to understand that Elon Musk does have a history of kind of saying that in every earnings call and kind of, in a sense, trying to pump up the stock, which sometimes I question whether that should even be said in the earnings call. But regardless, a couple of things I want to touch on, right? So, again, I don't put too much weight and emphasis on technical analysis, although it is a data point that we oftentimes want to look at. So one of the concerns that I mentioned previously is that, hey, we are touching this area where it's a descending trend, and it's likely that we may get rejected. And it looks like we are getting rejected around this area, right? But as I always say, the stock market does not have to be adherent to whatever lines you draw on the chart, right? At the end of the day, the fundamentals are what generally move the market, right? It's where people are putting their money and taking their money out of. And so I do want to just kind of mention that, yeah, we did see a rejection, but it's not out of the ordinary if we saw Tesla stock kind of bounce up eventually, probably not tomorrow, but in a couple of days, breaking this descending trend line simply because of what I mentioned earlier with the institutional ownership. For example, if we take a look at Microsoft, right? it's done very well for this year, but it's also been piled on by a ton of institutions, right? It has an institutional ownership of 73.91%. Which is relatively high when you compare it to, Apple or Tesla, which is 44%, almost half, right? And so one of the things that could be possibly happening in the next couple of days is, a lot of institutions kind of shaving off from those big mega caps like Google, Amazon, Meta, Microsoft, etc., and kind of start buying the dip on Tesla. Now, also, you want to take that with a grain of salt. That's just, a idea that I have, but it doesn't really mean that it exactly is going to happen. At the end of the day, these hedge funds or these institutional investors may completely just do the opposite and actually just continue piling into tech. Although, tech has been very crowded. I mean, if we take a look into the QQQs, I mean, it was, pretty much one of the only things. And the reason I'm paying attention to the QQQs is because the NASDAQ is generally seen as very tech heavy. And so we see that tech has pretty much rallied this entire year. But one of the concerns I have going into 2024 is, of course, interest rates are still going to be relatively high, right? We know that the Fed is most likely going to hike an additional 25 basis points at the next meeting, which is happening, I believe, on July 26th, so next week. But the idea is that even if they start cutting, it's not like the changes are going to be felt immediately. And we still have a multitude of hikes that have been done in 2022 that the economy has yet to be felt, right, or yet to feel. And so that's one of the concerns going into 2024. And I think, being that tech has been really kind of overcrowded. I mean, if we kind of just look at Microsoft, right, already at all-time highs recently that it hit, it's kind of likely that a lot of these institutions may start shaving off from that, right? But going back into Tesla, right, I don't want to kind of deviate too far talking about all these other companies, right? Something else I want to mention is that, I was always optimistic about the robotics for Tesla, right? We never really got to hear too much about it. But it was honestly kind of disappointing to hear Elon Musk also say that they've only done like 5 to 6 robots of the Tesla humanoids. So that definitely we can't that holds no value. That cannot be priced into Tesla. There's no way to actually put money into Tesla based on the robotics. Although we can understand that Tesla is really putting a large investment, right, in the research and development towards the AI spectrum of things, right? And this is really important because Elon Musk said, a lot of these other companies are focusing on large language models, but they're not really focused on doing anything beyond kind of what we already have seen with, OpenAI, etc., right? And what Elon is doing is pretty much making it that Tesla's the closest automobile company to reaching autonomy, right? And so that is completely why Tesla's priced in the way it's priced. He also mentioned that FSD, I believe, had around 300 million miles already factored into the beta, which helps obviously it learn and develop a little bit better. And he did say something that was optimistic, saying that, hey, at the end of the year, we could see FSD be actually better than human drivers. But again, Elon Musk does have a habit of being very optimistic. And so, this earnings call, looking at the fundamentals, looking at the numbers, yeah, we beat earnings as far as revenues, but it wasn't really one of the best kind of earnings out there, especially the forward guidance. It honestly wasn't the best that we've heard in the past, right? And so I wouldn't be surprised if we do kind of get rejected. And looking at this, volume profile, and I do want to just kind of take all these squiggly lines out. Seems ridiculous sometimes. But looking at the volume profile, I do believe that Tesla can get rejected, and there's a possibility that we may go back down to this 214 level before we see the scoop up in institutions, right? Because we know that around this area is where we actually see where there's a lot of volume relative to price, and that's why we see price action around that area kind of consolidate, right? We see that a multitude of different times on the chart. So that's just my thoughts. Now if Tesla does fall down and hold around this area, well, that's great news, because if you're a long-term investor, then obviously you're waiting for the stock to come down so you could go ahead and buy more shares, especially if you're optimistic for the future. future. And I am optimistic for the future. It's just, you know, right now, I'm not that optimistic going into the next few trading sessions. However, at the end of the day, you know, I don't have a crystal ball, and we're going to want to, you know, just, you know, continue parsing through the data that's going to be coming out through this earnings season. So that's definitely something that's going to be interesting. Now, if we do see institutional investors actually start piling onto Tesla much more earlier, well, that's great, because that would put us at this area where, again, there's very little volume by price, and we could get close to those mid $300 levels. But at the end of the day, you know, we have to really just pay attention to what's going on with the price action, and again, you know, really just stay data dependent with the upcoming earnings. But with that being said, guys, I want you guys to let me know in the comment section below what were your thoughts on the earnings for Tesla, also on the earnings call. What are your thoughts as far as a short-term trade, and also from the perspective of a long-term investor? For me personally, again, I don't plan on selling Tesla. I plan on actually adding more if we do come down. But at the end of the day, you guys should never copy based on what anyone else's you know, opinion is, right? Including my own. You should always do your due diligence and only trade and invest in what you see value in. But with that being said, guys, hopefully you enjoyed this video. I just wanted to make it as a quick update for the earnings if you didn't have a chance to listen to it. But I'll see you guys on this next video right over here. Take care, guys.